In this video, we're going over a day trade recap from Dr. Metals. Dr. Metals is one of the best zero DTE traders in the world, and he has a course out called the Statistical Day Trading course. If you want to learn from him, we encourage you to take a look at that course or join the Dorian Trader, and you can learn firsthand from him and others at the Dorian Trader. Then we got
Hey, O'Brien.
Thursday. Yes.
Hey,
Hey,
what's
good
going
morning.
on? I
Nothing
just,
much. How you doing this morning?
I'm doing all right. You just kind of looking over the economic news next
Yeah,
week.
yeah,
I'm saying,
yeah. But jump in because I know your time is uncertain. So jump in. Tell me
yeah.
tell me what you got
Well,
on.
yeah. I mean, I was posted in the Discord
Mm,
yesterday. I did something a little uncharacteristic. I thought maybe we were gonna go down.
mm-hmm,
For the day, and
mm-hmm,
I generally don't get directional, but I did. I put on an initial call credit spread. I think it was like it was like $500 worth of potential profit. And I was like, yeah, this is just feeling like a down day. I'm not going to put the put side on. And then, we had that big rally up
mm-hmm,
and whatnot. And so that let me see if I can't see it on your screen. That negative $900 and whatnot, that was
mm-hmm,
an initial call spread I put on for like 500, and I
mm-hmm,
bought it back for three times that, basically. Or I think it triggered a little bit below that. So that's where the negative 900 comes into.
mm-hmm.
And then once that happened, I basically wound up putting on kind of my standard position, as it were. So you see, I put on that 43.30 call strike at the same time I put on the 42.30 put strike.
Okay.
And, now that I had that loss to make up, I was pretty much committed to staying in the trade like the whole rest of the day, as opposed to, having the luxury, in my view, to kind of get out early, because I was trying to make up for that loss. And it just taught me a lesson. It's like, nobody knows what the market's going to do. I mean, obviously, we've been in kind of a downtrend in general this whole month, but
Mm-hmm.
it just rallied on up. And so again, if I would have had both sides on, then the size of that loss would have been half that. You know what I mean? As opposed to trying to, you know,
So
make
so
up.
looking so looking at this, Dr. Metals, it's this right here is including other positions, right? And then so
Well,
that's
well, well. The overall P&L at the top. Yes, there's a lot of
correct.
long-term stuff on there, but on the zero DTE was basically like a plus 900 to 1,000 on the day.
Okay,
So
perfect.
yeah,
That's what I'm looking at here regarding these numbers here.
hmm
Okay, all right. So, but that
correct.
that was an awesome comeback. So when you just for my understanding and others that's on the call that's interested, you normally put on an iron condor because
Normally, correct,
you're usually not directional, but for some reason
correct.
you got this
hmm
this feeling that okay, it's probably best not to put on the put side and just the call side because we could drop a lot, and then
hmm
so you decided to do that, but
hmm
it actually went the other way. You had an assumption, you put your trade on, it went the other way, you got stopped out, correct?
That is correct.
And then you came back
And
in with your tradition. Go ahead, I'm sorry.
yeah, you're explaining this right. Yeah. Then I put on my traditional exactly for, the same amount of risk on both sides that I'd lost. So I was like, okay, if I can win, and take in all the credit this time, to the very end, I can
Hmm.
still have a green day. You know what I
Hmm.
mean?
Okay, and a
But
nice green day.
right. But, so again, you know, just to re-emphasize to folks, I mean, if you want to be directionally biased, okay, just recognize, the downsides of that. I know Jack oftentimes has a directional bias, and he'll put one side on and whatnot. But again, if you wind up taking like a 3 times stop and you've just been directional, again, it's just more negative you have to overcome. You know what I
Hmm.
mean? So,
Absolutely.
and again, this also committed me, if I wanted to be, green for the day,
Hmm.
significantly. Like I could have gotten out after a couple of hours in my iron condor trade and been even for the day, right?
Hmm. Hmm.
Roughly. But I was like, look, I'm going to try to still get green, so you're kind of forced to stay in it. So I didn't take this off until like 3:30 or something like that. And again, I'm getting to that point where like I very much would like to be out of my trades well before power hour, if at all possible. So,
Hmm.
but again, I was kind of committed to trying to get, solidly green. And so I kind of had to stay in until the end of the day to make that happen.
Okay,
hmm
absolutely had to do that. Some might say that you could have got out once you were up, $100, something like that.
Oh
Um,
yeah, yeah.
but but when you got to that point, probably the trade was just looking really good at that point,
It
and you
it,
probably
it
said,
was, it was, but you know how this market can be. You know what I mean? So
absolutely, it can move on you really really fast. So you decided that you wasn't going to wait you wasn't going to go through that whole waiting hour, power hour, whatever you want to call it. You was going to go you was going to only go half an hour into it. So you got out still before
Well,
the
well,
expiration.
well, yeah. Well, at that point, I was able to get out
Mm.
for a nickel on either side. I put a closing
Oh,
order
okay.
in, you know what
Okay.
I mean, and
Hmm.
then they filled, you know what I mean.
Okay.
So, but again, ideally, if I didn't have that minus 900 sitting there, and I put it on just my standard position, I at least would have had the option to probably get out, around 130, 140. If I put my original position on at like 11 or something like that, I probably could have got out of the trade at like 1 o'clock and had the $1,000 and nowhere near have to worry about power hour.
Absolutely. And then also when you got into the trade originally and you lost that 900 and then you decided to go back in with your original size and so forth with the original type of iron condor that you do, you're putting yourself or you're opening yourself up to more potential loss, obviously.
Yes,
And
absolutely,
and
absolutely. Yeah,
and so, but it worked out this time that
it
the
worked out.
second
Yeah.
trade you didn't have to do anything to except just take
Correct.
off. Okay.
That's correct. But yeah, you're right. This could have easily been, another stop out or something and more loss. Yeah, no doubt.
Absolutely. But if it would have happened, let's say you would have got stopped out again, then you would have lost, let's say another 900, another 1,000. And
hmm
that's pretty much when you have that kind of situation happens, that's usually your loss for your size account. Then you would probably say, okay, I'm done now and be back at it the
Correct.
next day.
Correct. Because I'd be looking at it like, okay, I'm down a couple thousand. Like again, if tomorrow works out, I should be able to get that back. With one more trading session.
Okay. Okay, so
Right.
one last question now is that what are you looking at today? You're gonna put on something a little
Yeah.
later?
Yeah, probably. We got there's a 10 o'clock housing. I think it's either housing or consumer sentiment at 10 here,
Hmm. Hmm.
as the other kind of economic news. And I think most of the day is going to be directed by the favorable inflation stuff that came out pre-market. Obviously, we're up pretty good.
Hmm.
I have seen, kind of paying attention to these 10 o'clock announcements. You can kind of see some stuff, some movement here from like 10 to 10:30 or whatever. So I probably won't put my
Hmm.
initial position on until about 11. Yeah.
Okay, so you're
Yeah.
talking about Eastern Standard Time, everyone.
In the
So,
Eastern, right? Yeah.
all right. So, and
I
that's
have a
first.
I have a quick question for Dr. Meadows.
Mm-hmm.
Can you hear me okay?
Yes, sir.
Great. Okay, you started off the position with just one side. Had
Mm-hmm.
got stopped out on that side. Had you started it with an iron condor,
Mm-hmm.
you would have gotten stopped out on the same side, I guess. Or would you have
Mm-hmm.
adjusted the trade before you got stopped out?
Well, in this particular instance, again, I'm working, I'm in and out doing stuff and whatnot. I'm getting, sometimes I'm able to sort of see things, going against me beforehand, and I'll do like my cash neutral adjustments, and I'll kind of roll before I get stopped out, that kind of deal. In this instance, just given the dynamics of yesterday, I still would have gotten stopped out, but at least I'd have had half the loss if I'd have had the other side on to have been profitable, you know. But there are times when I'm able to kind of, monitor it and as I've shown before, sometimes I'll like if I'm at a 2 times loss on the one side as opposed to a 3 times, which is a stop out, I'll go ahead and like make an adjustment at that point and like maybe like recenter the trade to reflect the market having moved. So yeah, it's possible. But yesterday in particular, I would not have been able to manage it just because of the day job.
Okay, so that's kind of my
Mm-hmm.
question too. Do you typically have time, or do you typically adjust these zero DTEs? Because things happen quickly.
Mm-hmm. Yeah. Yeah. I'm more apt to make an adjustment like that if it just so happens like when I put the trade on, there's a lot of market movement in one direction pretty immediately. That's the most likely scenario where where I'll make an adjustment, because in the beginning parts like that, that initial 5-6 point movement, if it happens pretty quickly or whatever, your losses on the challenge side will match your gains on the unchallenged side, and you can kind of move it for fees and commissions. Don't get me wrong, that's a real cost, but you can adjust the trade and kind of recenter it, and then hopefully the market settles down and you start to get green on both sides of the trade. That's always the best. Whenever I put these on and I come back 15 minutes later or whatever, already gotten just a little bit of decay on either side, and you're a little bit green. That's always the best. But again, I put these on so many times. I've seen everything play out where like the minute you put the trade on, the market immediately starts to go against you, you know?
Yeah,
So,
that's always a bummer. So just for
mm,
clarification, really quickly, is that
mm,
what Dr. Meadows is saying with regarding that iron condor, everyone. This is why he normally says almost 100% of the time that he believes it's less risk if you put on the iron condor instead of doing a directional play, because if he'd have had that iron condor initially, instead of losing almost $1,000, he would have only been down 500 because the other side would have basically been a full
mm,
win. And
mm,
so when he comes back in to try to get back that 500, it's easier. He could have, instead of getting out at 3:30 perhaps yesterday Eastern Standard Time, he could have got out at 3 or 1 or 2 a lot sooner, because his loss would have been half the size because he did the
mm,
iron condor.
correct, correct.
So that's so when you have been awesome at this trading. So you've helped me convince me that I'm not going to be directional very often on those short-term trades. I'm going to do the iron condor and stop going with my assumption, because I'm only going to be right 50% of the time over time.
You're not going to predict the future there.
It's fun to do that. It's fun to do that, Rob. But